So you are an IPO specialist. Are you guys tracking the IPO for OpenAI just as closely as everyone else is in the tech sector right now?
Absolutely. AI is a huge theme in the IPO market right now. It has been for maybe the last couple of years, but has definitely grown in scale. And the looming OpenAI IPO is certainly on our minds right now.
Now, so we reported today on this funding round for OpenAI, $100 billion. It's nearing its final stages of coming together. They've got initial commitments from investors. The question I want to ask you to start with here is, to what extent does a funding round like this make it easier for them to delay an IPO? I mean, we've reported that it could be as soon as the fourth quarter of this year. Does this give them more leeway here? Do you see them requiring the public markets for their capital?
That's a great question. And normally I would say that a huge funding round like this could absolutely delay an IPO. But I don't think that will be the case for OpenAI for two reasons. The first being that given how much capital a company like OpenAI requires, um, tapping the public markets is going to be an eventuality. They're going to be eventually needing money from public investors, even with how generous private markets have been. And the second reason is maybe even more compelling, and that is pressure from insiders on liquidity. Private investors want to eventually, realize their return on investment, and the public market is possibly the easiest way for them to do that.
Now, what questions do you have in terms of deal structure here for OpenAI's offering, or maybe even an Anthropic offering? We've got SpaceX coming up. I mean, are there trends here in terms of deal structures, or just as you pointed out, I mean, with insiders wanting to sell, I mean, is there any particular type of deal structure that would really benefit them as these companies look to go public?
Yeah, the traditional IPO is definitely the premier way to go public. And insider selling on the IPO isn't uncommon. And I think, in fact, will probably be a theme among these very large IPOs that come to market this year. There is the question of maybe they might pursue a direct listing if they don't need the capital, but they want to give their insiders liquidity. And I think that is a fair question. But ultimately, a traditional IPO is still going to give them capital. And like I mentioned, even with all of that generous private funding, they need capital. Something that I think we'll also be watching for is dual class share structure. I think that will also be common with these larger IPOs, especially as some of the more visionary founders look to retain control even when the company is public.
Explain that for us a little bit more for people who don't know dual class share structures, what the two classes offer, which ones have voting rights. Just unpack that for us a little bit.
Sure. Yeah, a dual class share structure implies two shares, two classes. There can actually be more than that. It really just depends on the company. But ultimately, what it means is that some shares have singular voting power. You own a share, you get a vote. What we see sometimes, especially with these very kind of visionary companies, are shares that have outsized voting power. So that might be 10 shares per vote, 20 maybe in a more extreme case. We've even seen up to 100 shares per vote, even recently with StubHub. So that allows insiders, typically founders, to retain an outsized portion of voting power, even with maybe diluted economic ownership.
Hmm. So, one of the questions I've been thinking about is, if we've been talking a little bit about the race to go public amongst these AI labs, and we had a bit of a curveball threw at us when XAI merged with SpaceX, because I think nobody really expected XAI to be the first big AI startup, or AI lab rather, to go public. And now it's very much looking like they could be, by way of this acquisition. But, we've seen some headlines out there that OpenAI and Anthropic are kind of in a bit of a race to go public. And I wondered, from your end, does it really make a difference who goes public first? I mean, uh, is there any business interest in going public first at all?
Absolutely. And it can kind of be a two-part answer. One being that you go public first, you get the buzz. You are the first major AI company to tap public markets. But on the flip side, you're also the first one exposed to that potential, slide from being in public markets. If your stock doesn't do well, that could totally disrupt the IPO market going forward. So there is, I think, a race to capture this early buzz and the early excitement that we've seen growing around AI. But there might also be, that voice in the back of their head saying, maybe it's better to let the other one go first, see how markets respond before we, put our money on the table.
I want to go back to what you were talking about with the insiders selling shares and that being a theme for some of these big issuances. I mean, educate us here a little bit on how you end up tracking that because I know there's a lockup period. I mean, does that end up having an effect on the stock price after the lockup period expires, or how does it end up affecting the stock price ultimately?
Ultimately, in a traditional IPO, when insiders sell shares on the offering, what that means is that those shares are right. They're bought by the underwriters. They're distributed by the underwriters. So there is no initial trading by these insiders like there would be in maybe a direct listing. Um, so the impact on the share price might not be tied directly to insiders selling shares as much as it would be public investors interpreting insiders wanting to dump their shares as possibly a negative, a negative aspect.
And so, in other words, I mean, is there any way for us to know which insiders are selling their shares in the offering itself? Is that sort of where reporting comes into play, or I mean, how do you think of that as a student of this space?
Yeah, you can find that information in a company's prospectus. They might not disclose every single small shareholder. A lot of them do have tables that show every insider that is selling shares, but you certainly can see which of the major shareholders. So that's 5% or more, or any officer or director of the company. You can find that information right in the prospectus. So they do have to be forthcoming with that. And that gives public investors a leg up on that information.
Now, you've been at Renaissance for nearly 7 years now, and I wonder over that time how you've seen the balance between a company's narrative in an IPO, how that weighs with the company's fundamentals. And I'm asking the question because here we have a SpaceX IPO, for example. I mean, the narrative around uh, yeah, orbital data centers, for example, is the thing that they seem to be pushing, and now they have the AI angle with XAI, and a lot of these companies, AI companies especially, they're burning cash, right? I mean, these are not the most um, uh, financially prudent companies, at least as far as the bottom line goes that we've seen, and so I wonder how you've seen that balance shift over your time at Renaissance and how you expect it to change.
It really depends on the market we're in. If we are in a very strong market, public investors might be more willing to accept a played up narrative on maybe not such a match in fundamentals. Whereas in a stricter market where there's more discernment, like what we've seen really over the past few years, a narrative only goes so far. You can tell every investor that is interested that you're a tech company, you're a tech company, you're an AI company, but if your business model, if your fundamentals don't show that you're, really a tech company, you're really just a consumer company, maybe with a tech platform, um, or that your, financials don't line up with a company that should be, growing maybe 20% plus a year, and you're only growing 10. Um, Investors are much less willing to accept that narrative. Premium valuations go with premium fundamentals in much more challenging markets.
And so, with all that in mind, and also taking into context the recent performance of some of the software stocks that we've seen, I'm not asking you to predict anything about how an OpenAI or a SpaceX IPO will perform, once they do list. But how much appetite do you think there will be for these companies, and how are you thinking about the considerations that investors will make?
Mhm. That's a really good question. I think it's hard to say, but right now, the appetite for AI, for a true AI play, is very strong. It is volatile. We've seen, like with the recent tech sell off, that there are fears around AI. But a company like OpenAI or Anthropic, where AI is their business, there's no way to spin it that it's not. Um, that could definitely and very likely will definitely cause a lot of buzz, a lot of demand. These will likely be very hot deals when they do come to market.